the latest health check on the world economy, the IMF predicts lowest growth rates since 2009, since the financial crisis. What's behind that? I will be talking about that with Jochen Möbert from Deutsche Bank Research. Mr. Möbert, so we see lower growth rates in China and we see lower commodity prices. Is that what the IMF is pessimistic about?
Yes, China is one big story currently, so lower growth rates in China, negative news, the drop in the Chinese stock market is all contributed to the assessment of the IMF. But overall we see sluggish growth rates in many countries, we see worries for all emerging markets, in particular if the Fed now starts to raise to high rates. So this could lead to additional capital inflows to the US from the emerging markets and with tremendous effects on the emerging market economies.
What do the DBIX figures tell us about the world economy?
Yeah, the DBIX inline dropped the third consecutive month in a row, again in September, and it shows that we have a sluggish growth rate all over the world.
Couldn't we see it the other way around? So if China grows slower, if the world economy grows slower, couldn't that be a more sustainable growth?
It could, but given that we have very high debt levels in many countries and also in China, lower growth means we have to adjust also the growth rates in the credit sector, and this might have then again ripple effects on prices, asset prices around the globe, and then this could again translate in lower growth rates. So that's the worry the IMF and many economists have.
So that's not the solution.
That's not the solution, yeah.
So the ECB, for example, is pumping fresh money in the markets every month, like about 60 billion euros. Did that help so far?
Well, it helped to stimulate credit growth to some extent. So we see credit growth in many Euro area countries picked up. But we have still very low inflation rates and growth is also relatively sluggish. So currently the ECB is considering to extend or enlarge this program to foster growth and to foster inflation rates.
Also, the key interest rates are at a very low level all around the world. What is needed to push the economy? Structural reforms, for example?
A lot of structural reforms, yes, in particular in Western countries, which have the looming demographic effect in a few years, in a few decades at the horizon. Well, we need more balanced growth between emerging markets and the industrial economies, and these are the main topics.
Thank you very much so far, Mr. Möbert. We will be talking about the state of the German economy and about Volkswagen that has to recall 11 million cars. So what does it mean for the German economy, for German companies that have to export their products? You can watch this interview on dw.com/English/Made in Germany.